What I'd like to see happen here is that we regulate stablecoins first because of their utilitarian value within the crypto universe, and that get done in this calendar year. And the reason that might happen is Toomey is retiring, and he is a driving force, as you know, on the Hill, and is really behind this momentum and this bill, and has lots of support from both sides of the aisle. So I think that's good.
Hello and welcome to Wealthy Value. In today's video, Shark Tank investor and popular Canadian businessman Kevin O Leary, also known as Mr. Wonderful, updates about the recent events, including the crypto lender Voyager filing for bankruptcy, Bitcoin's volatility and market performance, and how low it can go before recovering. Kevin O Leary also speaks about the importance of owning crypto without leverage and why regulation is extremely important in the crypto industry. Make sure to stick around till the end of this video where Kevin O Leary reveals his thoughts on stablecoins and why we need a policy for them. By the way, are you losing money because of a crypto market downturn? With Margex trading platform, you can open long and short positions so that you can profit even during falling markets. Margex has been nominated by finance magnates as the most user-friendly trading platform. Cross-margin is available on all assets, and you can trade with up to 100x leverage. Keep in mind that leverage trading involves risks. That's why if you don't feel confident enough, you can trade with small amounts. The minimum deposit is only $10 and minimum trade size is $1. You will never find any hidden commissions on Margex, and all deal indicators are on screen and available in real time. It's possible to use 10 cryptocurrencies as a deposit option. For a limited time, you can get a 15% bonus on your deposit. First, sign up through the link in the description. Make a deposit of $300 or more, enter your promo code on the wallet page, and get a bonus of 15% on your deposit amount up to $10,000. And now, back to our video.
You know, this is nothing new in the story of leverage. And so in every cycle, what happens is various actors, companies, take on more and more aggressive positions using leverage to goose returns, which is age-old. It works. It definitely works. Now, what you're going to find in this situation is many crypto operators, particularly lending platforms, have never operated it with such volatility before. So they were in the slow growth from Bitcoin, almost a decade ago, from $800 all the way to $60,000. And all along the way, some of them became really aggressive in using leverage, which is the traditional hedge fund model. And this happens in equities, it happens in bonds, it happens in real estate, it happens in crypto. Crypto's the Johnny-come-lately new asset class with a whole lot of newbies in it. You're going to see a whole series of these actors get crushed to zero over the next few months. In the contagion of leverage being caught offside with the lack of liquidity. Voyager is not that big a deal. It's kind of irrelevant in terms of, this is a diversified shareholder base. It's not FDIC insured in any way, so it's not putting any stress on the government systems in any way. All the shareholders should consider themselves educated, no different than when you go to Las Vegas, put it all on black, and it's red, you lose. And that's exactly what's happened here. But the great news about this and why this is so good for the market and how this helps the crypto market is it educates the business models that aren't going to work. So it's like taking a big spatula from the sky and scraping all the crap out of the market. And it's going to happen very, very quickly. So anything that was built on a business model that is not going to work or can't sustain volatility is going to be gone, and it's a good thing. It's a wonderful thing. It's going to leave the industry much stronger. Yes, we must mourn the investors that got wiped out to zero, but even they are better off in the sense that they've been educated. It's impossible to know, where the bottom is, but I would say this: I don't believe we've seen the bottom yet, and I have a different view of it. I go back again to other asset classes that I've invested in for decades. In every case, traditional bonds, traditional equities, real estate, alternative asset classes, bottoms are reached with an event, a panic event, as I call it. And you can find it in every asset class. Back in the hedge fund days when they started gating, these large multi-billion-dollar hedge funds that gated, shut down their liquidity, caused panic, and you saw bottoms in equities as they were being liquidated. There's long-term was one of the classics in the last couple of decades. and it was a fund that was over levered and blew up. We haven't seen that yet in crypto land. There's no big guy has gone to zero yet, and I think that's still to come. Hard to say who it is because it's going to be because of leverage and some kind of relationship in a counterparty holding that they have not disclosed. And I'm just speculating right now, but that would be very healthy for the market to have that happen. Voyager's too small, it doesn't matter. The rest of these guys were kind of irrelevant in terms of total market cap. Bitcoin and the crypto market itself has almost been cut in half in total market cap. And so you would think we're on our way to the bottom, but I like a big panic event. That's always been a great way to bottom. It's towel throwing, it's capitulation, it's massive volume, it's total panic in the streets, and always a great buying opportunity. You own crypto without leverage, and you understand your counterparty risk. Don't worry, by the time all the litigation is over from all these bankruptcies, you'll know everything about everybody. Lawyers are really good at doing that, and there'll be tons of class action, if not just straight on litigation. When I hold crypto, and I know it's very volatile, I have zero leverage in any of my positions because I know tomorrow morning I could wake up down 38% in any token, any coin, any project. And really, that's exactly what's happened. So, but if you put on leverage, you learn the very important lesson. You go to zero. So that's where you need management and compliance and total transparency. And so those who have opened accounts with Circle itself, managed it under corporate accounts, understand exactly what you just disclosed. But also the company is constantly monitoring its margin requirements and exactly what it's got and what it's holding. And if you have an account with Circle, you're getting a constant stream of information answering exactly those types of questions because they have their brand to protect. They also have that dollar strike value to protect, and they have their corporate accounts and account holders to protect, and they want to do that. They want to emerge from this successful, even though it's been tested with volatility. And I will remind you that recently it was disclosed that both Fidelity and BlackRock each invested $200 million in the Series F of Circle. That is a huge vote of confidence in the middle of all of this volatility. People think that crypto, the entire sector, is going to get regulated all at once. That's not going to happen. Is that we would like to get policy on just stablecoins first, because stablecoins represent a very powerful and efficient payment system. And we think we can get bipartisan support between both parties supporting the American dollar as a default currency for a global payment system. It's not going to be the Chinese yuan. It's not going to be the Swiss franc. It's not going to be the euro. It's not going to be the British pound. And the reason it would fall and default to the US dollar would be that that is the currency used to denominate most commodities. And so the challenge you have right now, and why there's so much pressure to solve this, is it's very inefficient to transfer US dollars over to Geneva, then put it into Swiss francs, and then buy Swiss Nestle stock or whatever it is you want to do over there. It's really slow, very inefficient, very costly, not transparent, and not easy to audit. And so all of that problem goes away with a stablecoin. Now, the proposed policy that you'll find in granular form in both the Haggerty and Toomey bills, and I've met with both of them as many others have, this is very simple policy. What it looks as, it says, okay, for any stablecoin, an audit every 30 days. And any asset underlying, holding up the value of the coin or token, cannot have a duration of more than 12 months. Now, you've seen that policy before. It's called a money market fund, and you'll find it at Fidelity and Putnam and many other financial services entities that are FDIC insured. Circle, if it wished, that issues USDC, could become a bank. They could be FDIC insured if they wanted to, but they are sort of leading the pack with crypto in terms of payment systems under a stablecoin that has not broken a buck. What I'd like to see happen here is that we regulate stablecoins first because of their utilitarian value within the crypto universe, and that get done in this calendar year. And the reason that might happen is Toomey is retiring, and he is a driving force, as you know, on the Hill, and is really behind this momentum and this bill and has lots of support from both sides of the aisle. So I think that's good.
So, do you agree with Kevin's take on Bitcoin's market bottom? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.